Hey guys, welcome back to Tradfi and Bitcoin Club. So today we will be discussing about MSTY versus MSTR or IMST and what are covered calls and things like that. So yeah. So today one of my friend Finning shared this tweet with me like uh, I am a Bitcoin maxi, no 401k, no stocks, just BTC. So you can't buy MSTY. So, but MSTY gives me income, so I never sell my Bitcoin. People stacking MSTY are more maxi than the maxis. So I am not claiming I am like this is true, but yeah, I mean I don't know if you can if you are able to I mean take some leverage by using MSTY and then covering the EMIs with MSTY's income and investing rest of the debt in Bitcoin, then maybe you are more maxi, Bitcoin maxi, because you are stacking more Bitcoin. So I don't know. Maybe we'll figure it out. Yeah. So let me share. Okay. So I am like this will be also like one of today's presentation will also be like one of our previous session. So yeah, my screen is visible, right?
Yes, yes, we can see your screen.
Yes. Yeah, yeah. So before going into that, let me take you to YieldMax website and MSTY. What are they doing and how are they doing? So MSTY is basically an option income ETF where they are trying to build some strategies like selling covered calls and doing some stuffs and giving dividends monthly or every 28 days precisely to be precise. Like you will receive 13 dividends in a whole of financial year. So yeah. So currently the distribution rate is 81.4%. So how is this calculated? Like distribution rate is uh, like for example, if the fund's price is 20 and they issue 1.33% of $1.33 of dividend, then distribution rates comes around 81.4. Yeah, something similar. Like 20 was not the price when they declared $1.33 share dividend. So yeah. So MSTY is doing great from I mean they launched it around in 2024 in April, so nearly a year back. So yeah, they are doing good, and people in TradFi space are talking like MSTY versus MSTR, like what to do. But when things comes to India, or when you look at it as an Indian investor, like me and Bala were discussing in a TradFi and Bitcoin channel about it. Like Bala has posted a post wherein he was asking like how to sell covered calls sitting in India. The sad part is that an Indian investor can't sell covered calls on foreign equities or like legally we are not allowed to do that. But yeah, there are ways like you can invest in MSTY through some of the stockbrokers. So MSTY is doing that for you. So yeah, this is the dividend history of MSTY. Like they are pretty much consistent. I mean, not consistent, but they are giving out dividends since last year. So yeah, worst case before the current drawdown of Bitcoin from 110K or 109K to 75K. Worst case was $1.85 a share. And after this, like currently 1.3 and 1.33 were the current last two dividends. So yeah, I think this was the worst dividends which they have distributed uh, since last year. So yeah, this is the website which you can come and do your own research. And just to give a disclaimer, like everything which we are discussing today is not a financial advice, and do your own research. And yeah, so let me go back to the chart. So in the announcement section, I have shared the links to these PDFs, like wherein the prospectus. So people who are more interested, they can go into this prospectus and see what these guys are doing in and how they are doing in. So yeah, today I will discuss it with the help of this chart. So what's the fund summary? Fund summary, herein we have investment objective, fees and expenses, investment strategy, principal holdings, underlying security. So underlying security is MSTR. Basically, MSTY is an option income ETF based totally on MSTR. Like they sell covered calls or puts and everything like that with respect to MSTR as a base. So yeah, and what are the risks? So we will study this. So what is the objective of the people who are looking to invest in MSTY? The objective is to seek current income and gain somewhat exposure to MSTR's price. So MSTR's price, but it will be limited. Like if you invest directly in MSTR, you will get much better returns because of the strategies which they are implementing, like selling covered calls and covered call spreads and strategies like that. So I will come to like what are covered calls and yeah, but currently we will go by step by step. Fees and expenses. So what's the expense ratio? Management fees is like 0.99% and no other expenses. So total expenses are around 9.99%. So they are taking a 0.99% fees to run the strategy on your behalf. So what are the investment strategies? So strategies are options on MSTR. They purchase call options, they sell put options, they are selling call options. So yeah, they are doing pretty much stuff. And basically they are focusing mainly on at the money options. I'm not sure, like people are aware of what are at the money, out the money, in the money. So at the money is basically, for example, like let me just open MSTR. So MicroStrategy is currently trading at around 346 dollar a share. So whatever I mean the options which are whose strike price is 346, they are known as at the money options, and options whose strike price is more than 346, they are known as out of the money options. And basically this will be the case in case of call options. And yeah, and less than 346 will be in the money. So yeah, So let me just go back to our chart. So MSTY strategy is basically they sell at the money options and 1 to 6 months expiration options. So there are many different kinds of options which are currently available in the US markets. Like you can go to leaps, MSTR leaps. So what are leaps? Leaps are basically like, for example, current price is 346, and you are buying a leap. Like you are betting MSTR's price will go beyond $1,200, and you have an option, call option for that. So they are called as leaps. I mean, uh, yeah. So let's not go into leaps and what is that and all. Let's just stick around what's covered call and yeah. So they also are implementing selling put options, which are at the money, 1 to 6 month expiration, help pay for call options. Like when you sell put options, you collect a premium. So from that premium, you are able to buy again call options, because when you are doing covered call strategy, you have to buy call options again. So yeah, selling call options monthly or more frequent, 0 to 15% above current price. So like current price is 343. So I mean, the covered call strategies which they are doing, they will sell covered call, like they will sell call options basically in the 0 to 15% range of current price, because this will help them to collect more and more premium. And yeah, because of this, there will be a limited upside. So yeah, I think this is the right time to go in prospectus, and there they have given one example wherein they are uh, they are explaining us a strategy like how they are selling covered calls. So yeah, covered call spread strategy. So let just go back to the prospectus, and here's an example wherein they have given an example like how they are doing this covered call strategy. Yeah, this one. So here's an example of a covered call strategy. So let's just focus on covered covered call strategy first, and then come back to covered called spread strategy. So yeah, example scenario one: selling a covered call on an underlying security. Underlying security share price $100. Strike price of the sold covered call $105. Premium received will be $2. And so premium received basically the call option which you are selling, that's the price of that call option is $2. So whoever is buying that call option is giving you $2, and you are receiving a $2 premium, because you are selling and guaranteeing the buyer of the call option that I will I will give you a share uh, at $105 share price, even if the share price is above $105 a share. Like in this case, like what happens if security price rises to $110 a share? So the fund does not participate in underlying securities gain above $105 a share, because the fund sold a call struck at 105. So gain on the underlying security will be $5. Like 105 is the current price, and $100 was the was the price when you when you got into the contract. So $5 from that and call premium which you earned upfront of $2. So total gain is around $7. $5 gain on underlying security and plus $2 premium. So yeah, uh, this is basically uh, this is basically how covered call works. Till now, if anybody has some doubt, feel free to ask. Like I have bombarded you guys with information. So yeah, till now, if anyone has any doubt, feel free to ask.
Uh, I have a, I don't have a related doubt, but one question that I wanted to ask is as an investor, uh,
Yeah,
these two products, MSTY and MSTR, for different sets of investors, right? But
yeah.
if you do not care about like that part, and uh, someone just wants to maximize their returns, MSTR
Hmm.
is still a better prospect than MSTY, right?
By seeing the past data, yes, but there's one more new product in the market called as IMST. Jeff Parks is the fund manager there. Basically, Bitwise have launched IMST. So their target is like I was watching a podcast related to this. So he mentioned it like mathematically it's possible to outperform the underlying asset, which in this case is MSTR, by doing the by implementing such strategies like selling covered call or uh, covered calls spread strategies. So he was explaining like there are strategies where like he made a point wherein he said like it's possible mathematically to outperform MSTR by doing strategies on options of MSTR. But what MSTY is more focused on, MSTY is more focused on generating more income. That is why they are selling at the money options. Basically, at the money options have uh, the premium is high. So they are collecting higher premium, and MSTY is basically more focused on income side of things rather than outperforming it. But there are some guys on Twitter who have done some research, and basically they have reinvested their dividends, which they have received from MSTY. So by reinvesting, they are calling it as DRIP, dividend reinvestment plan. So by reinvesting that dividend, some people are claiming like they have been outperforming MSTY. But as an Indian investor and even as an US investor, if the MSTY ETF is not in a tax advantageous account, then it's taxable. To be specific, in India, I think me and Bala were discussing. I mean, there's around 25% withheld tax. So, 25% of the dividend amount is withheld by US government, and with 25% tax decay, I don't think we will be able to outperform MSTR uh, by I mean by investing in MSTY. So it's difficult, but some people are claiming it, and also uh, the timing. I mean, at what time you came into MSTY, that also matters, I think. But yeah, mathematically it's possible, but probabilistically and in a real world scenario, I mean, it's difficult to outperform MSTY
To outperform
simply
MSTR.
because, yeah, sorry, MSTR.
Yeah.
Yeah, I
Yeah,
think maybe I can add a bit there.
yeah, yeah, sure.
Yeah, so I think Saurabh's understanding is right. In the case MSTR goes off the roof, right? Like does really, really well beyond all these strikes where these guys have bought the puts or calls. In that case, a plain vanilla MSTR buy will give you better returns than this strategy. What this strategy is doing is it's eating off into your big upside, eating up into that big massive upside that MSTR might have. It is eating a bit of it and converting that into yield or a cash flow on a regular basis. And in the end, what's going to happen, what your returns will also depend on how you reinvest that income, right? uh, in case of MSTR buy and hold strategies, there's not going to be an income, right? That income is only going to be at a sell off when you eventually sell it off at a high price.
Got it.
Yeah, and I mean, if you want to,
Bro, Digant, you are using Twitter like TweetDeck. You've got so many tabs open.
yeah,
You're the first guy I'm seeing using Twitter like TweetDeck. But yeah, good to
I
see.
mean, I have seen a tweet which was relevant to your question, like, and even Finning explained it great. Like, whenever uh, there is like Finning made a point when MSTR grows through the roof, and I mean, in a short span of time, in that time, MSTR will outperform MSTY. And in a period of like sideways market or a downtrending market,
MSTI will also.
MSTY will outperform. Let me just compare the chart. Like, see the today's scenario. So today's MSTR is up 9% and MSTY is up 5.78%. So this is a classic example of like how Fineng explained. Like today MSTR is up 9% and MSTY is up 5.78%. But let's see in 1 month scenario. One month also. MSTR is up. Let's see in 6 months. Yeah. So currently there is no way. I mean, in 3 month scenario, I think it's a little bit different. I think uh, maybe we can compare it on trading view. No, in 3 months also MSTR is only outperforming.
Got it. Yeah, just a question that came to my mind. But
Yeah, yeah. You can see this phase. Like this is the phase where MSTY was outperforming MSTR. So when is this? This is around
That's in a
January.
down market, Digant, as you
That's in
see.
a down market. Yeah.
Yeah. So it
So this
becomes
is
like a bit more safer bet and reduces volatility
yeah,
and also provides a cash flow, right? Yield.
yeah, yeah.
Cash flow, really.
cash flow, yeah.
And this chart is not uh, dividend reinvested back into MSTY. This is plain chart of like MSTY's share price. So if you reinvest that dividend, maybe I mean outperformance. We can see outperformance in this
In more
phase
detail.
also.
Yeah.
Yeah.
I
Okay.
think generally, if you're going long on Bitcoin, MSTY does not make a lot of sense. But if you have, because even if you reinvest into MSTY, it does not make sense because essentially that yield is coming from accretive value of Bitcoin. So accretive value of the stock, which is the underlying is Bitcoin.
Yeah,
So
yeah.
in the
Me
long
and
run,
Bala were discussing this in a Tradfi channel. So I made a point in where, as an investor, to me, it doesn't make sense to put my dry powder or the cash which is sitting idle in my portfolio to invest in MSTY, because
hmm,
there's a tax, and the only case which makes sense for me is like take a loan and invest the amount or amount of around 50% in MSTY, or for 30-40%, which basically covers your EMI, monthly EMI, and rest of the amount in Bitcoin. So this is the case. Like, this is a speculative attack for an Indian investor.
I was more interested in can we make some sort of a calculation by using historical data to see even if we don't reinvest the yield that we get from MSTY, even after paying the 25% tax, uh, would it be something sizable so that we can cover all the cost of capital that we might be we might have to take up?
Yeah, yeah. Sure. I mean, we can do that. I mean, by studying previous data, we have their previous data of dividends. So yeah, we can
Yeah.
do a study on that.
Yeah, and
But yeah,
about why
yeah, yeah.
people would need it, Saurabh, I don't know. I mean, it certain investors might have an objective for this kind of a payoff. Like if you just look at my case at this point in time, right? I don't work a job. I have an investment portfolio. I hold on to some bitcoins, let's say some gold, some equity, and so on, right? I need a cash flow, right? I don't earn anymore. I need a cash flow. Selling every month to manage that cash flow doesn't look right to me. I would like ideally to seek rent either from, let's say, a property I own, or if I don't own a property, maybe from a stock I own, right? Or from bitcoins I own. In such case, I don't have to make a decision every month. I am long Bitcoin as well. If you see, if I am on this ETF, and I am seeking rent month on month, that in itself will depend on on how the strategy does, right? Uh, that's the objective I can see for some investors.
Yeah, I was also like thinking along the same lines. Some like most right now you can get a very good the cost like you can get very good rates for gold. So I want to explore if we can if we can use gold to do this route and raise some or ensure some regular cash flow.
Hmm.
Basically, pledge gold, borrow, then buy MSTY, use the yield even after the 25% tax, 25% withholding tax. Use it, uh, pay off the interest, and can we keep cycling it? So that I was thinking along those lines.
By the way, Bala, did you do further research on, like, I have made a point wherein you can claim the 25% withheld tax by US government and show it to your employer, and ask him to, like, I am already paying this much tax. So ask him to not cut the TDS. So have you gone through that? Like,
No, I didn't have time to get into it. So I know we can like there are some we'll have to work around it, but I just want to see at least the base case. Like, does it make sense even in the worst case?
okay. I mean, uh, the the
So
question is basically like, you won't be reinvesting the dividends, right?
Yeah, yeah. I want that cash flow for my. I want that cash flow for my own use.
Okay, okay, okay. But and compare the MSTY's price with Bitcoin. Like, uh,
No, no.
you are also getting the cash
Like
flow, and you also want the return which Bitcoin is giving. Am I right?
no, no, no. Definitely, definitely not.
Okay, then
No, I
how?
am there.
I don't think that's possible. Like
What are we are thinking? I mean, I'm also thinking on the same lines as Bala. What we are trying to look at is what kind of performance has this ETF provided in the last, let's say, it has 1 year of history, right? It has given
Yeah,
out about 12, 13 dividends. In the
yeah,
1 year, yeah, it'll be nice to see how it has paid out its dividends. Uh, and yeah, might be also good to measure it just relative to Bitcoin, right? Buy and hold strategy of Bitcoin. But maybe that is not necessary. We can all check how Bitcoin has done over the last year. Uh, just the performance of this, right? How much dividend has it paid out for an investment of, let's say, $100 at the beginning of the fund's launch? Uh, Taxes, let's face it, it is what it is, right? I don't think there is a way to avoid it. We lose
yeah.
25%, that's fine. But just trying to see if $100 has been enough to pay bills, right? Or so.
Okay.
As a cash
yeah,
flow generator, has it done its job, or can we rely on this for next year?
Hmm. So there's a
yeah,
point
yeah. That's
wherein
best.
there's a point in risk wherein yeah they talk about NAV decay, NAV decay. So basically this has happened, NAV decay. Like from a $33 share price in April last year, today we are trading at around 22. So this is not exactly NAV decay. This is also related to MSTR's price and Bitcoin's price, but NAV decay is basically every month they are giving a dividend. So, for example, before dividend the price is $20 and they give a dividend of around $2. So then after dividend the share price will eventually trade at $18. So this happens, and they have to continuously generate some yield to keep up to uh, to keep up the NAV where it was 1 year back. So this is a risk. NAV decay is a risk. Maybe I will come to it in the risks part. So yeah.
With respect to benchmarks, I was more thinking like it would not be right to use Bitcoin or MSTRs as a benchmark for returns for
Yeah.
MSTY. More
Mhm.
like I was thinking more maybe the best performing dividend stock. Maybe we can use a best performing dividend stock in S&P 500 probably and use it
Hmm.
as a benchmark. Maybe that is more
And
right.
also, Bala,
Like
there's a volatility of dividends. Like last year in the April month, dividend was $4.12, but this year is 1.3, and you can see volatility. Like it is not kind of FD, it's volatile. So
yeah,
that is also a risk.
yeah, yeah.
Mm. So okay, let me let me get back to the chart. So yeah, what I was explaining, investment strategy. So investment strategy, I explained covered call. I didn't explain covered call spread. So let's get back to covered call spread. So in the case of covered call, as I explained here, MSTY or any investor who is selling covered calls, they made a gain of $7. But when you do a covered call spread strategy, you will receive around $9.5. So it brings closer to MSTR. MSTR, yeah. So let's get deep into covered call spread strategy. So underlying security share price will be $100. Strike prices will be of a covered call spread will be around sold call at $100, purchase call at $102.5. So net premium received is $2. Outcome. So outcome if security price is $110, share price increase, the fund does not participate in the underlying securities gain between 100 and 102.5 because the fund sold call struck at $100 and purchased a call struck at 102.5. So the net premium received is around the fund retains the net premium of $2. Long call gain. So long call gain is happening 110 minus 102.5, which is $7.5. So herein we are making $7.5 a gain by making a purchase of call at $102.5 strike price. So covered call spread strategy is more effective strategy as compared to covered call, as like they have mentioned it, but I think they are missing a point wherein they have to uh, give out a premium while purchasing a call here, like $102.5. So I don't know why they haven't explained it here. I don't know. I mean, because if you are purchasing a call, you have to pay a premium. So that will be an outlay of again nearly $2 or something similar to that. Fining, do you have a point in here? Like, do you see why they haven't mentioned it here?
Sorry, what are we missing
Also, can
here?
you zoom in a bit? Also, can you zoom in a bit?
Okay,
Can you tell me what you think is missing here?
like here in covered call spread strategy, they have purchased a call of $102.5, but they have not accounted it like the net premium received is $2, but while purchasing a call, they have to pay a premium to purchase that call, right? So I don't know why.
Sold a call at 100, so the premium received is for selling that call,
Yeah, yeah,
and they also purchased a call at 102.5. They haven't accounted for the cost there, you're saying. No, so you see, what they've mentioned there is net premium received. So when you sell a call, you get a premium, okay? When you purchase a call, you pay a premium.
yeah.
So net of that is what is written down there
Okay,
as
okay. Basically, it's considering it.
yeah,
Yeah,
it's netting
I
out
got
the
confused.
sell
Yeah,
and
yeah.
buy.
Mhm. I got confused because I thought the call premium is $2, but in this case, maybe the call premium is more. That is why the net premium is received again same as in the case of previous example. Okay, yeah, got it. So yeah, covered call spread strategy is like it provides more of an upside, or it's more of an efficient strategy when compared to covered call in case wherein the underlying is rising. So if underlying falls, this might not be the effective strategy. I don't know. They have given an example wherein they have considered a case wherein a loss. Okay, so they haven't considered a loss making strategy.
Yeah,
So
that's
okay,
where I think the protective put. You remember, there's another
yeah, yeah,
strategy
protect you put.
put
Yeah.
comes in, but I don't know if that's a part of this strategy because these guys are long. Bitcoin, right? Protective put
Yeah.
probably comes in a inverse strategy of this.
Inverse strategy. Yeah. They have, by the way, they have one more option in committee of what's the ticker? WMTX or WMTR? Yeah, something similar to that. So they are short on Bitcoin and short on MSTR, and they are generating uh, yield from that volatility. So
Oh,
maybe
they're
protect.
offering that as well.
Yeah. They are
Ah,
offering that as well. So okay, let's get back to the chart. So the compulsion for them is like 80% net assets in MSTR exposure, like options related to MSTR and rest of the fund in US Treasuries, basically. So this is one of the compulsion for them. Principal holdings, so purchased call options and sold put options. So here in this chart has uh, this they have explained sold put options also, but I didn't find any strategy where they have explained sold put strategy. We can see their live portfolio, I think. Yeah, here. So they have cash. They have 16% in US Treasuries, 3.85% again in US Treasuries, and they have a call option of 9.29% exposure. Again call. So okay, they don't have any put strategy. So okay, maybe they implement it according to the market. I don't know, but yeah. Underlying securities MSTR, business and operations, acquire and hold Bitcoin. So it's going into MSTR strategy. I'm not missing anything. Okay. Okay. So let's come to risks. What are the risks? So MSTR risks. So basically something happens bad with MSTR, not necessarily in case of Bitcoin. Like maybe the case wherein the Bitcoins which MSTR has bought, they get hacked. Something similar to that. MSTY will go bust. So indirect investment risk. Indirect investment risks are basically you don't get voting rights, you don't get dividends from MSTR and subject to MSTR performance. Trading risk. So high volatility, short seller pressure, public perception impact, potential litigation and trading halt impact. So this is basically things that can happen to MSTR. Maybe US government uh, halts the trading of MSTR, and yeah, that will be risky and to MSTY investors as well. So yeah, performance risk, failure to meet expectations and stock price decline. So in case of stock price decline, they have outperformed MSTR, but yeah, there might be some cases wherein the decline is slow and gradual. Because of that, in that case of scenario also, they they might underperform MSTR. And in case of a sudden decline, they might outperform MSTR. So this might be the case wherein they have explained the stock price decline as a risk. What is software industry risk? So this is not. I don't think this as a percentage of risk. I don't think this is a huge risk to MSTY holders because 99% of MSTR's share price or is related to Bitcoin and not to their traditional IT software business. So yeah, this is not a great risk to consider. Bitcoin risk. So Bitcoin risk is, yeah, this is a this is a risk which we as an MSTY holders or MSTY investors are which will we face as an MSTY investor. Uncertainty of new technology. Okay, so this is going into quantum threat. So what happens if quantum comes tomorrow and Bitcoin breaks? So in that case, MSTY has a risk. Limited history. Basically, these are Bitcoin's risks. Bitcoin has limited history of around 10 to 15 years. Volatility. Uh, Volatility, I'm not sure why volatility is here. Like basically, MSTY is harnessing volatility and generating income. So yeah, there might be some cases wherein volatility also acts as a risk to MSTY holders. And the last risk is regulatory uncertainties with related to Bitcoin. So yeah, next comes in derivatives risk. So larger losses, smaller gains, potential, imperfect correlation, leverage, volatility of underlying asset and option expiration. So these are all risks related to derivatives. Capped upside. So capped upside is basically what I explained in here. So in covered call strategy or covered call spread strategy, the upside remains capped. So that is basically the example. Distribution risk. So no assurance of monthly income. So this is what I was explaining it right here. Like monthly income is not like a fixed income. It depends on market and market volatility and things like that. No assured monthly income, variable of distribution amounts, return of capital possible. This is interesting. I mean, MSTY is continuously doing return of capital rather than giving out dividends from the yields which they have generated from options. So basically, the people who talk in against of MSTY, they are talking about it like return of capital is happening. Like for example, you invested $100 in MSTY, and the dividend which you are receiving is from your own investment, like $100 of capital, and the $2 which you are receiving, the $2 are coming from that $100. So this is basically the return of capital. So return of capital is sometimes tax efficient. So this is also the case. Like US investors are claiming a return of capital is happening. So the dividend tax is not applicable on this return of capital. So this is one of the, I mean, a tax efficient way you can say, one of the tax efficient way, as well as, I mean, the if you see the negative side, you can see this as a Ponzi scheme, like your own capital is being returned by the management of MSTY. So yeah, ROC, I mean, return of capital has both sides. I mean, it's tax efficient and something related around Ponzi. So yeah, the next risk is NAV erosion risk. So this I was trying to explain, like NAV drops by the distribution amount. So this is eroding your invested amount. Like for example, you have invested $33 a share a year ago, and today it's $22 a share. So this is not exactly NAV erosion, but over the time NAV erosion will you won't get $33 a share today. So this is one of the risks, like NAV erosion risks. Repeated distributions erode NAV. So yeah, this is basically why NAV erosion occurs. Authorized participant risks, basically this is a risk from MSTY who has I mean it's from their end, like they might have some authorized participants who are doing in kind creation and redemption of ETFs. So from that loophole, or from that point in time, if any authorized participant goes bankrupt or something happens wrong with that authorized participant, then implications can happen to MSTY as well. Cash redemption risk, inflation risk, liquidity risk, money market instrument risk, newer fund risk. So these are, basic risks which are related to these. Not specific to MSTY, but specific to every other investment out there. Newer fund risk is much more related to MSTY. Because MSTY doesn't have any it has only a single year of history. Non-diversification risk, greater percentage in single issuer MSTR. So basically, this is only focused with MSTR and harnessing volatility related to MSTR. So it is not a diversified kind of a thing. So you have to keep in mind it's not diversified. Market event risk. So this is more of a general risk, like it is applicable to all equities or all securities or all ETFs. Single issuer risk, again MSTR. Tax risk. So tax risk RIC qualification. So this is one of again a risk which needs to be discussed. Like RIC is regulated investment company. So if US government by law changes something, and they say like MSTY is not or yield max is not in a regulated investment company, then they have to pay tax on the income or the yield which they have made on the options by doing the strategies like covered call and covered call spread. So there will be double layer of taxation. Like first they will pay tax on the income, and then we as an investor, we again pay tax on our dividends. So currently MSTY qualifies as RIC. So currently this is not the case, but we don't know what might happen in the future, and US government takes away the status of yield max, and MSTY is not a regulated investment company. So this is the risk to consider. US government obligation risk, RIC diversification requirement. So yeah, RICs have diversification requirements of around 25%. So I don't know what's happening in case of MSTY. I think they have been diversified pretty enough. I think you can't hold 25% of the amount in in MSTR's options or something similar to like that. So currently they are holding cash 45%, and rest of the amount in big chunk is in US treasuries and cash. So what this point means is like what this point means is like, if for example currently the law says that you have to have Like your investment can't go beyond 25% in a single option or a single stock or something similar to like that, except US treasuries and cash. So if this thing is brought down or something is changed by US government by law, then there's a risk, clearing member risk, valuation risk, and rolling option risk. So yeah, these are some of the risks which we discussed in here.
So is there some way to quantify at least some of the major risks? Can we in some way calculate risk weighted return? Have people tried that?
Yeah, people. Bala, you can join MSTY community if you are active on Twitter. There's a community which
Okay.
talks only about MSTY. Maybe I can share a link of this community.
Okay.
NAV erosion risk. So NAV erosion. So NAV erosion has been pointed out by some people. Like NAV erosion is happening in current market conditions. So yeah, people have figured some ways out to do this. Mm, yeah, people are doing. I mean, there's a way to quantify it. So I think additional information is more about what we have discussed. Let me just see quickly if something is left. Yeah. So this point, like as Finneng and as Saurabh was mentioning, is there any case wherein MSTY outperforms? So slow rise, MSTY might outperform in slow rise case of scenario. In decline, it might outperform, or in flat case it outperform, and in significant rise it underperforms MSTR. So this is a case. So this might not always be the case, like in 100% of the slow rise case of scenarios, we can't say 100% it will outperform MSTR. Like there are chances wherein it will outperform MSTR in slow rise cases, but there are equal chances wherein it might underperform, or it might just track MSTR. Management, how to buy and sell shares. Okay, so this is basic, I think. Distribution, monthly dividends are there. Premium and discount, available funds website, financial highlights. Okay. So yeah, I think I have covered everything basically related to MSTY. I have not touched IMST today. So maybe we can come back to IMST in